Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He also writes for the Financial Intelligence Report. He's speaking to us from the Bahamas. Welcome back to the show, David, and Happy New Year.
Hey, thanks for having me.
David, how is the changing face of politics in the U.S. going to affect the markets?
Well, I know that today gold is down about $40 because we have this backup in interest rates, and a lot of algo kind of computer-based funds are taught to like sell gold when rates go up and this sort of thing. So, we have this kind of short-term sell-off, and also gold had a big run-up too going into this. You know, it'd run up to 1950 an ounce. So it's kind of just doing some regular a pullback. And actually the stocks are acting much better, which is always a positive sign because a lot of people believe that gold equities lead the metal itself. So I think this is the best thing that could happen as a gold investor is I was actually hoping as a gold investor, forget my own political beliefs, that the Democrats would sweep Georgia, which they did, looks like they did, and then take over and the Senate because that means, I think, you know, unmitigated spending. Because, look, what's happening now is different than Clinton in the 90s or Obama in 09. They're much further to the left, and I do believe in this great reset in terms of, like, I know some people believe it's conspiracy theory, but I believe it's more, you know, they do believe in this kind of green economy and using a lot of government spending. And it's more like they're going to deem themselves to be the next FDR, you know, and bail the economy out with government's help. The difference is the debt is so much higher now than it was. The debt was almost non-existent when FDR took over in 1932. So I do believe we're going to see a lot more of this. And of course, the first thing you'll see is that $2,000 stimulus check added on. And then after that, you're going to see the $600 on top of the $600 one. And then you're going to see all kinds of student loan debt forgiveness, all kinds of green energy things, et cetera, things that are going to cost trillions and trillions of dollars. And really at the time, the government does not have the money to do this. And then on top of that, you know, you're going to see taxes increasing. And sorry to my American friends, I always kind of laugh, you know, at my American friends when I met a guy from Florida here on vacation, and he sort of complaining about his taxes. And I'm looking at him like, you have no state income tax in Florida. Like, you know, they're you know, that top rate of whatever, 35-40% kicks in the hundreds of thousands, if not millions of dollars. And, you know, in Canada, our top rate is 45% of kicking and, you know, whatever, you know, 60 grand or 80 grand or whatever it is. So they're going to now, I think, have more, pay for all this, have more European style, and Canadian style taxes. Probably one of the things that will get introduced will be a VAT at some point, and then there are wealth taxes. And I think the plan is, Biden's plan is that people who make over $1 million a year have to pay like 40% capital gains. That's 23% now. So those are people who invest a lot, right? So I think you're going to see this changing dynamic as well with that, where the U.S. is going to become more of a Western European, Canadian style welfare state. So I don't think that's a good thing for their economy longer term. And they compound that with this huge national debt, which is going to at some point become a problem. And right now in today's rally, the bank stocks are out a lot because when yields go up like this, it means that mortgage rates go up, and the idea is, when mortgage rates up, you know, banks can make a little more money lending on the mortgages, but they're kind of in a catch-22 because they can have mortgage rates go and rates go up a tiny bit, But if rates go up too much, like just 2 or 3% on the 10-year bond, the federal government in the States, same thing in Canada, by the way, the federal governments in these places are broke. So they could have mortgage rates go up a bit, but but they can't have interest rates go up really that much more than they are today. And if they do, especially with them issuing all this debt for stimulus going forward, you are going to see them print money to, buy bonds, on the long end to keep that long end down. And that's pure debt monetization. And I think when that starts, and it could start as soon as the late January, Fed meeting, but when that starts, I think you will see a huge amount of, move into the gold and precious metals after this initial sell-off due to, rates going up in the short term.
So does that mean you're bullish on gold no matter what?
Well, yeah, this is the most bullish scenario for gold I could possibly imagine, And then the second wave is, because the stock market is such a bubble, we'll get into that in a second, is that I think that once the vaccine is kind of given out and we get more herd immunity by, say, the spring or the middle of the year, people are going to look around and say, well, all the stimulus has been announced. We're kind of back to more normalcy of people being able to travel more, move around, and hey, the economy's still crap. A lot of small businesses failed, and we can't really do much about it. So that could trigger the stock market starting to roll over, and then again, that's good for gold because it's going to kind of like that fear trade. The metal, that's another problem with gold today, that with the stock market going up in anticipation of stimulus and these yields backing up, you kind of got that yield trade and some of the fear trade coming out of gold as well. So, I would have been probably bullish on gold anyhow because of all the debt that's being issued. But definitely this, and go look at after the financial crisis, last time the Democrats had, power in all three, silver went from like $10 an ounce to $50 an ounce in 2 years. So yeah, the history's there saying that this can happen as well.
We'll have more with David Skarica right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with David Skarica. We were talking about a toppy, frothy stock market. How long can stocks continue to climb?
Well, I think here's the thing that's unique about this bubble is that there's something I ran into that was very funny. People talk about the Robinhood traders. There's actually pages. I'm not on TikTok. I think TikTok is kind of the end of Western civilization. I'm saying that tongue in cheek, but yeah, I think the worst of all these apps, but the dumbest of all of them. But anyhow, and people are giving investment advice out on TikTok, and there's one that's rotating around. It's a very pretty blonde girl talking about, keep buying, and Tesla has been up, 1,000%, blah, 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 and, almost acting like it's going to go up another 1,000%, in the next 2 years. And we all know that past returns always mean future returns, right? But anyhow, so I think what's happening now is these millennials are driving this. They're actually using it. I talked about this in the past on the show. They're inflated unemployment benefits, these stimulus checks. That was what she's talking about too, is here's how to turn your $600 stimulus check into $13,000. Well, and then now it can mean turn your $2,600 that's coming, into $50,000. And the idea is you just invest in all these little these tech stocks. Of course, a lot of these tech stocks have benefited from the lockdowns, people doing meetings over Zoom instead of like meeting each other in person. People ordering stuff online instead of going to malls and shopping centers, etc. So I think that since that kind of comes out of it, people just the quote unquote Corona or COVID trade, you know, and so that kind of comes out of the market. And then all these valuations are extremely stretched, more than even 2000. So we had like the most overvalued market of all time. So, and then when that stimulus wears off, and like I said, and I think the economy is nowhere near what people think it's going to be post COVID, because governments have basically destroyed the incentive someone has to start a small business. Why would you start a small business now when you know that any kind of crisis happens, they can just shut you down and, you know, and really don't care about you. So, so you have that factored in. And then these naive investors, these TikTok, you know, millennial, investors who, had never seen a bear market. Most of them piled in right after the market decline at the end of last year. They'll all panic and sell and sometimes kind of decline. And if say, like, I don't know, those higher capital gains taxes kick in next year in the States, people may start to sell thinking, oh, you know what, the market's going down, I might as well just lock in on the gains I have and pay that lower tax rate anyhow. And that can exacerbate the selling situation. So, I just think we have this mass overvaluation. We got all these naive investors driving it. The valuations are ridiculous. They're the highest we've ever seen. This is really a 1929 tulip mania, South Sea bubble, in 2000 tech stock. This is the exact, 2007 in housing in the States. This is one of the most extreme bubbles we've ever seen. So, and I think that will blow up. And what's interesting is, I think it's the exuberance of the young investors, and again, I don't want to get into politics, but mostly these bubbles tend to happen during Republican administrations. There's a great book by John Kenneth Galbraith called A Short History of Financial Euphoria, where he talks about how most of these bubbles actually happen under Republican administrations, because people who are Republicans tend to be more free market orientated, you know, more pro markets, more capitalistic, have money, and then they tend to believe in kind of like the American dream, and they kind of get exuberant when everything is great. Well, now younger millennial people are kind of more woke, they're more liberal. Now that Democrats control everything, they're going to print all this money and spend all the money. They think that's going to cause the economy to be great, you know, and I think that, you know, go look at the exuberance there was from that kind of woke crowd when Trump lost. I think that is kind of leading to this same kind of thing, this feeling that this boom, not even a boom yet, but everything will boom, or boom in the markets will continue, and then they'll get crushed under the weight of them. Because remember, there's another aspect of selling pressure too, and Harry Dent talks a little bit about it. I don't agree with a lot of what Harry Dent says, but he does have interesting takes on demographics. But you know, at the same time, the woke crowd is buying this. The baby boomers are selling, because, you know, my dad's a baby boomer. He's 67 years old, right? Or about turned 67. So, you know, you'll want to get out of equities when you're getting older, because you're in retirement, and the baby boomers are selling as well. So when the millennials kind of have to sell, and all the momentum players have to sell, I really believe we will have a 29 style crash now. It got way more extreme than I ever thought would happen. I never thought we'd see the 2000 highs in terms of valuation taken out, but we have. And I think it's just going to be, and then here's another issue on the other side of this. The governments are all bankrupting themselves. There's going to be no stimulus checks in 10 years. So if you think, like, I don't know, the riots that happened, you know, after whatever, George Floyd and the whatnot were bad, wait till you see what happens when the government can't bail everyone out, you know, post-COVID.
We'll have more with David Skarica right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with David Skarica. David, what do you say to the people who say you should sell all your gold and buy Bitcoin?
Well, look, I'm not a totally anti-coin person. I'm not like Peter Schiff that way. I think, there's interesting dynamics to the blockchain technology. There's interesting projects going behind some of these coins. There's a different way of doing it. It's kind of like venture money, but again, it's in these coins rather than stocks. I'm old-fashioned in that if I buy an IPO, and I do a lot in mining, venture capital and raise money for companies, etc. I like being a shareholder because a shareholder you have some kind of rights. You can vote by proxy if you want the management out, etc. You don't really have any rights owning coins. They're really just a way of trading or speculating in a different manner. But I find it interesting. I like the concept. The way the guy set up Satoshi or whoever this Bitcoin is interesting because he did it in response of the financial crisis when governments were printing all this money and he restricted the number that can come out. So I think there's like some interesting aspects of it. But I think the problem is, again, it's kind of this cultish crowd. And if you go look at just the price action in it, right? This is the perfect example. I guess like the proof is in the pudding. The proof is in the price action. What's essentially gone on with Bitcoin is every time the market gets really frothy, like it did in 2017, or like it has in the last 6 months, it goes like crazy with the market. It doesn't go up on its own. It doesn't go up in, when the market was tanking earlier and then they started printing all this money off the bottom earlier this year or last year, the Bitcoin didn't really do much into December. It was gold that came off in kind of response to that, as kind of a fear trade, after it sold off with the market initially. So the Bitcoin thing to me is just, it's frothy. It's just a representation of the bubble. And I'm sorry the coin people don't like me saying this. And maybe if after the next bust we go into some hyperinflationary spiral, Bitcoin will go up, with gold and other hard assets. But I think right now it's just an extension of the bubble. And I ask people, here's the last thing I'll say to this very question. Do you think the same person buying Bitcoin or speculating Bitcoin is also speculating in Tesla? Or do you think that same kind of person is buying gold, as both of alternative currencies? I would argue that the person that's in Bitcoin is much more like the person trading Tesla or speculating in Tesla than the person who's in gold and silver. That's my own personal opinion. So, and again, go look at the price action. Bitcoin peaked before the market peaked in 2018, but 2018 was a bad year for the market. The market fell 20%, and Bitcoin got crushed. And then this past year, where the market after those March lows took off and now is in some frenzied bubble, Bitcoin has gone crazy, just like 2017 when the market went crazy. So it's just, to me, an extension of liquidity. It's an extension of the market bubble. Maybe if you did have some people who were in both, they're seeing gold lag right now, and they're selling their gold and getting into Bitcoin, so.
It's one of the dangers.
I think mostly it's just hot money.
It's one of the dangers with Bitcoin. A government could just outright ban it. China has, I think, officially said no to Bitcoin, although I'm sure there's lots of illegal trading of it anyway there. Again, the Chinese government, depending on who you're bribing at the time, will turn a blind eye to illegal activities. And what about the U.S.-China trade wars that have happened? Will that continue if there's a new administration?
I think that's over. I know Biden's going to want to talk. He's copied some of Trump's policies on domestic production of goods. First of all, Trump was a lot of talk on that. What did they really do? There was some stuff with agriculture. There was some minor things. But problem was every time the trade war, Trump liked to pump the stock market, being a finance guy, real estate guy. And every time the trade war talks kind of heated up, that stock market would sell off and he would kind of cool it down. Nothing really got done, right? So I think that's over with. I think they'll call it normalizing relations, but I think the EU just did some kind of trade deal with China. So I think you're going to see that kind of go out the window, even if Biden does try to, because I think that was one of Trump's policies that was a little bit popular, kind of being aggressive with China. So I think that's kind of over with him. In terms of those cryptocurrencies, I think that's going to be the big thing, is that all these, again, I think these millennials are the most, everyone thinks the generation below them are idiots, right? But I do think these millennials have no concept of history. They're really naive. They're probably the most sheltered generation ever. And I think what they think is not going to happen, that, these are going to be all these currencies and they're going to be alternatives. No, what these government, I live in the Bahamas. The Bahamas just started something called the sand dollar. It's the first ever government-backed cryptocurrency, just linked to the Bahamian dollar, which is linked to the U.S. dollar. And you can get a sand dollar card, and it hasn't been implemented well because, a lot of Bahamians I know don't even have bank accounts. So I don't think they're going to, have a sand dollar account. But anyhow, like, I could have a sand dollar card. You have a sand dollar card, and I just move my sand dollars to your sand dollars, right? So that's the concept, and I think what's going to end up happening in crypto is the governments are going to take over, regulate the hell out of it, and then have their own crypto-backed currencies, and then make it very difficult for anyone to have their own private crypto-backed currencies. And I think that's ultimately where it's going to head as well, which also, on top of when the stock market bubble crashes or pops, that could do that as well. Like this government implementation of these cryptocurrencies. One thing about doing that too is that's a way to get everything digital and get rid of a lot of the cash economy, so the governments can kind of track everybody's transactions and tax everything.
Is that the ultimate goal? Have everything electronic so they know exactly what you're spending and tax the hell out of it?
Yeah, I think that here we don't have income tax here in the Bahamas, right? So, so they have a VAT, and that's kind of the way the government's making their money. So all of a sudden, if I'm buying goods and services, or they do have something called national insurance, which is like Canada pension or Social Security. And, when I pay guys cash, obviously they're not going to pay their national insurance. But if we all have to use our sand dollar card, and then I deem I'm paying this guy for, some work he did at my house, then he's got to pay, whatever, take 5% off and put that into national insurance. Or I go to the store and use my sand dollar card. It's they'll say, that's a transaction. It's 12% the VAT here. 12%, boom, has to go on that as well. So I think, that's the way. And now these governments are so broke after all this COVID spending, it's going to get real ugly.
David, thank you so much for chatting with us.
Yeah. Okay, thanks.
My guest has been David Skarica, founder of the Addicted to Profits newsletter, online at addictedtoprofits.net. If you have any questions for David or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.